Welcome back. We'll begin this segment in the Middle East, where the markets are, of course, closed this Friday for the weekend. However, they were mostly low on Thursday as crude oil pulled away from a near one-month high hit in the previous session. The indices were in the red except Saudi Arabia, which closed up 0.35%. Abu Dhabi was down 0.55%. Dubai down 0.19%, and Qatar Stock Exchange was down 0.10%. In Asia, markets had a choppy session on Friday after oil prices surged more than 2% and the Nikkei fell to a 4-month low earlier in the session after the U.S. fired dozens of missiles at a Syrian airfield. The Nikkei share average registered a 4-month low of 18,517.43. Even though the index had made gains of 0.8% earlier in the session, Japan's benchmark index recovered to close 0.36% up. The Kospi was 0.05%, while the Australian ASX 200 declined by 0.11%. Mainland Chinese markets were in the green, with the Shanghai Composite 0.22% higher and the Shenzhen Composite inching up by 0.043%. Hong Kong's benchmark Hang Seng Index dropped by 0.62%. At the oil market, the prices surged more than 2% on Friday after the United States launched dozens of cruise missiles at an airbase in Syria. After tepid trading before the news, Brent crude futures, the international benchmark for oil, jumped to $56.08 per barrel before easing to be up 1.6% at $55.75 per barrel. U.S. West Texas Intermediate crude futures also climbed by over 2% to a high of $52.94 a barrel before receding to be up 1.8% at $52.61. Both benchmarks hit their highest levels since early March. On the precious metals now, gold rose more than 1% on Friday to hit a 5-month high as investors sought safe haven assets after the United States launched missiles against Syria airbase, potentially escalating tensions with Syrian allies Russia and Iran. Spot gold had risen 1% to $1,263 per ounce. It earlier climbed as much as 1.4% to its highest since November 10 and was on track for a 4th straight week of gains. U.S. gold futures also climbed 1% to $1,266 an ounce. Away from the markets, some of the bank's South African regulators have alleged rigged the rand currency, say the case against them lacks specific details about anti-competitive conduct and its impact. The banks have also questioned whether the country's competition commission can penalize banks which do not have subsidiaries or branches in South Africa. The Competition Commission is seeking to impose fines on more than a dozen local and foreign banks that it alleges colluded to coordinate trading in the rand and the US dollar. The Commission launched the investigation in April 2015, joining a global clampdown that has led to big banks being fined around $10 billion in total for rigging interest rate and forex benchmarks. It referred the case to the Competition Tribunal, which holds hearing on antitrust matters before making a ruling. The Commission has recommended that the tribunal impose fines amounting to 10% of the bank's South African revenues, the maximum allowed. And South African Central Bank says banks are adequately capitalized to deal with effects of a sub-investment credit rating after S&P downgraded several major financial institutions to junk status. The resilience of the banks, according to the Apex Bank, stems from the high capital buffers that prevail in the South African banking system. Overall, the South African financial system remains healthy, robust and resilient despite some headwinds caused by elevated levels of domestic economic, financial and political events, as well as global financial market volatility. In the meantime, Fitch Ratings has cut South Africa to junk. Our investment analysts had predicted that the rating agency is likely to follow rival S&P and cut South Africa's sovereign credit rating to below investment grade, an outcome that would underscore worries about political uncertainty and prompt a further sell-off in assets. Downgrades to junk from at least 2 agencies will see South Africa drop out of some widely used global bond indices and force international funds which track them or which are prohibited from holding sub-investment grade securities to sell. With an aim to promote clean energy and reduce electricity costs, developers in Kenya are being pushed to fit homes and buildings with solar panels for water heating. Kenya is one of the countries leading Africa's push towards solar energy use, but it still relies heavily on hydropower and geothermal energy. Experts say solar power has huge potential in Africa and is generally more cost-effective when compared to getting connected to grid electricity.
Green Park, a residential estate located about 20 kilometers south of Kenya's capital, Nairobi, is one of a handful of housing developments promoting solar-powered homes in the country. Founded in 2006, the 150-acre estate has 400 units, all fitted with solar panels for water heating. Developers are currently working on the 5th phase of the scheme. The panels are made locally and fitted by Stillstone Kenya, who has been contracted by the developers of the estate. Each solar unit costs about $800 to install.
The use of solar, the developers are now, everyone is making sure that they install a solar system during the time of building. So this has worked to the advantage of solar contractors in Kenya, and which in turn means more business for us. But in the same time, that doesn't mean we start providing poor quality services. So as a company, we always ensure that we give you good service and good quality.
Residents like Ruth Nganga says the panels have helped out electricity costs by nearly half.
Basically, it's a very energy-saving product that we have, because we're able to have hot water throughout the day, depending on the usage, and also in the night. Yeah, so we don't have to to put power on. You always have hot water whichever time you need during the day. We're normally able to use the water for washing, for cleaning, and also for the bathrooms.
Kenya is one of the countries leading Africa's push towards solar energy use. Experts say fast-dropping costs for solar power, combined with plenty of sun and a huge need for cheaper electricity, holds huge economic potential. Better transmission and storage of solar energy could save countries billions. The country's Energy Regulatory Commission, ERC, has said property developers must now install solar water heaters in buildings where occupants use over 100 liters of hot water a day by May this year, following a regulation that came in force in 2012.
And finally, the Executive Board of the International Monetary Fund has concluded the Article 4 consultation with Djibouti. Now, Djibouti is expanding its transportation and utilities infrastructure to leverage its strategic location as a shipping hub and host to military bases. The board noted that while the ambitious increase in infrastructure investment, mostly debt-financed, contributes to a broadly favorable outlook for Djibouti, it also elevates fiscal and debt vulnerability. The directors encouraged the authorities to press ahead with critical reforms aimed at translating this investment into strong, inclusive and job-creating growth and returning debt to a sustainable trajectory. And with that, we come to the end of the program for today and, of course, for the week. Thank you very much for watching. I'm Chimezie Uwabu.